Okay, well, quick welcome once again to everyone in the room for the Intraday Strategy webinar for today. We just got the release for the CPI print, a little bit stronger than expected. Okay, we were expecting some weakness on the release, but came in line expectations with the headline figure, core topping estimates on month, and obviously the year-on-year flat, but still topping that negative 0.1% expectation. So you're seeing some dollar strength on the back of that release. And as we head into the U.S. Open, that's going to be the test of the key support structure here on the index, which is continuing to sit in that slope support range that we've been watching essentially since the October lows. Eileen says, good morning, Michael. Hope you're well. Good to see you. Eileen says, wish I would have jumped into that sterling dollar long I saw unfolding earlier. Oh, well, always more trades. Yeah, we'll have plenty. There's been a lot going on. The intraday page is kind of packed right now, but let's jump in. So the euro dollar has been the primary focus for me over the last couple of days. I haven't taken anything today per se on the euro, but it's been a decent play, both on the long and the short side. At this point, again, we're flat as we continue to hold below 110.95, 110.96, a region of resistance that I'll show you on the intraday chart real quick. But quickly, on the daily, I just wanted to highlight one thing. It's the 50% retracement of the range off the February highs. And it's also the 618 extension of the ascent off the lows. Okay, and that confluence region is exactly where we're looking for a possible near-term swing high here in the euro. It's never prudent to try to call a high in a rally like this, but nonetheless, the technical lineup is there. And here's the reaction. So this is the scalp from last night's report. Here's what it looked like last night. We were hovering right into this region. So just a quick recap, guys. We went over this in the scalp webinar yesterday. That's archived. By the way, the public daily effects webinar is also archived on SB, guys, so you can refer to that one. But the long exposure off of the 107.50 level, we closed that out yesterday ahead of the webinar, and post the webinar, you got a nice signal to the top side here as you were showing some divergence for a short against 109.38. I left the chart up for the previous days, guys. 109.38 was actually a clear 764 retracement. Actually, if you take a near-term extension, it turns out to be the 618 as well. And that was the target that we took the short off of yesterday. Now, I sent out a tweet on that. I think I linked it here yesterday. Just to show you guys how the entry looked, right? Really nice divergence into the highs. 3-point trigger break gave us an entry. We jumped out the initial 236. It was only 29 pips. It was actually 30 if you round it. We're looking for 40. Once we achieved 40, it took out another half of the trade as we were coming back basically into this region here, okay, into the same support region. Stops went at break even for the last quarter, and we actually got stopped out on the rally there into the highs. So a trade where we made money on the short despite the fact that the broader directional bias for the day was on the upside. The flexibility and the nimbleness of the strategy allows us to do that, guys. So obviously the operative trade would have been to be on the long side, but again, we're looking for some sort of near-term peak here as we continue to press into these trend lines. Long story short, you're still showing divergence throughout the course of the week and last Friday's high, higher high, higher high, higher high. The oscillator continuing to make lower highs. So the momentum signature certainly is not instilling much confidence for maintaining an upside bias from here. That might have been the perfect reaction we just got, actually, guys, the catalyst that we need. Kind of messes up the opening range here, but if we make it back below this same confluence region, you look for a move right back into the 108.80, 108.75 barrier. And again, objectively, that's the opening range high for the week. Here's your weekly open. All right, so the setup is still pretty clean. I don't have any quarrels about this. Yes, we got stopped off in the last quarter of the trade here, but guys, when we're near-term trading, that's going to happen. I actually took I think you might have seen it here. I took a break-even stop here on the dollar-yen. I thought this was a pretty compelling signal as well. I sat in this for hours, guys. This was very painful for a guy like me, but you had some divergence into what looked like on the 5-minute a nice trigger break here. Okay, on the upside, sometimes these triggers will work, sometimes they won't. This is what I was looking at. So you had some divergence into the lows, you came back, you made a trigger break to the upside, it came back, tested support. This is where we jumped on the long. You actually had an opportunity here, guys. We were well above 20 pips. I think it was like 23 pips, 24 pips at one point in the profit. Just didn't take it. I was really trying to get that stretch into 120. Again, this was another trade where we should have been chipping off every time we got 22 pips, but I kind of just let that one sit out, and then it stopped out an overnight trade. So we'll see if we can get another shot here on the dollar yen. It's been an interesting setup. I'll show you that setup in a moment. But any questions on the euro, guys, as far as how that's been panning out? Here's what the opening range looks like so far for London. The London Open actually gave you a quick spike into 109.40, and then this was the break that validated the break of the London opening range high. Here we are testing the London opening range high as support. Note that on the rally here, failure at 60. Okay, again for the euro, so it continues to suggest we're seeing this thing get a little tired towards the highs. This is going to remain our bearish invalidation level, and as long as we hold below this region, continue to favor the short side near term for euro. If we pop through, the stops on the swing side of trades are right around the same region that we're looking at, which is 110.35. In fact, 110.36 is the actual 100% extension just off the base from the low that we made on Thursday, and obviously the swing high that we made on FOMC in the euro dollar. So heading into the U.S. session, we're looking for either a break below that swing low that we made, i.e. slope support, or a break above, basically 110. You'd look for that stretch into 110.35. A little bit tight here on the upside. Not sure I'd be willing to play this, guys, but certainly on the turnaround story, the shorts look pretty appealing from here. 40 pips is about the quarter of daily ATR, so that's what you'd be looking at per scalp on trades in the euro. Nice little support trigger there as well. Looks good. Looks good. Next trade on tap, sterling CAD from yesterday's piece. Looks like this. All the sterling crosses, guys, were a wicked, wicked ride this morning. Obviously, we got the UK CPI data coming in more or less a little bit weaker than expected on the year-on-year. Here's what that release looked like earlier today. So you got the CPI data month-on-month coming right in line with expectations. Year-on-year, slightly softer, but core year-on-year, stickiness in those core prices. 1.3 versus, or 1.2 is the actual, we got 1.3 was the expectations. That's a 0.2% drop in core CPI. BOE's singular mandate, guys, is price stability or inflation. That's their only mandate. They don't have a dual mandate like the Fed. So certainly inflation targeting is their core asset, and looking at the CPI data here, a little bit softer than expected. That being said, you did see a quick drop down in the sterling and a quick recovery in a lot of the pairs. It's a very, very dangerous market to trade into this release, but here's what that looked like last night. So sterling CAD, we were looking at this major key slope support. The break of the Asia opening range did shift the focus to the upside. It was accompanied with a trigger break in momentum. We noted that in the report. We were looking for resistance at that trend line. This is the bearish invalidation, or the bullish invalidation level. A break below this, we would have been looking for a drop for 85.40. You got the break, didn't quite make it into 85.40. Here's what sterling CAD looks like on the 30-minute. You just missed 85.75. There's the 50% retracement. So the risk is still for a drop into that zone, guys, below 86.68, below this slope, former support, now resistance. We got to be looking lower. The only thing that would pull me back on the constructive side would be a break back above 86.70, this region right here. All right, so we are looking lower. Short scalps favored below 86.68, near-term support 85.46 beyond today's low, and then 84.78 would be the subsequent target. You're looking about 40 pips per scalp. And again, remember at the start of the week, guys, on the Sunday report, we noted this thing is in super compression mode. Okay, something's going to pop here. Something's going to pop. So you can see this is off the yearly high from February. Okay. And you can see the compression here into the lower median line parallel of this formation, as well as just basic trendline resistance off the highs. Okay. So if this break is legit, You break key support. You check it as resistance. You see the continuation lower. Remember, on the broader scale, guys, this is the formation that we're working on, the assumptive break. If this is a legitimate break, we came back, we tested it as resistance, there's a lot of room to the downside. Okay? If this is going to be a false break scenario, we're going to fake out some heads here, look for a dip into this region, and then a ripperoo. Again, this is all speculation, postulation. We're just looking at the major key levels here just to highlight it. But that's sort of where the broader picture is. So long story short, below 86.68, you want to be wary of long positioning. You're favoring the shorts. You're looking for support at 85.46 and 84.78. Questions on Sterling CAD. Here's the 5-minute looks like. Okay, there's a little trigger that came out earlier today. Notice on the rally, even on the 5-minute, 60 hold here in momentum. Price action back into the former opening range low, now resistance. Still looking lower, sub 86.68. Okay, not much of a trigger here on the 5-minute, but actually a nice little 1-minute trigger that just gave out towards the highs there too. So watch the U.S. opening range. It would be very, very nice if the U.S. opening range sets up right below 86.68. Then you get the downside break. That would be a conviction scalp heading into the U.S. session. Again, trade sessions indicator, guys, it's a good idea just to have it on your platform. It can be helpful just to highlight sort of where the highs and lows are for each session. Take a quick look here at the New York opening range. Puts it right above 86, around 86.08 as the New York opening range. For a break of that to give you a little bit more of a directional bias. We're looking for that dip into 85.45. All right, and next up on tap was Sterling Oz. Very similar setup, okay, in that we're coming into key support. Sterling Oz looked like this. This was obviously the cleanest setup to start off the week. We talked about this at length in yesterday's webinar. The major key support heading into the open, again, was the 92 barrier into 91.85. Guys, I went ahead and I'm going to try to leave the previous day's charts just so you can kind of walk through, you know, how the trade panned out. I don't know how many charts I'll be able to squeeze in here by the end of the week if we'll have all 5 charts for each day, but I will try to keep a little bit more so you can follow through on the trade there. I think it's helpful. And also when I adjust the levels, you'll be able to see the level adjustment. So let me know if you find that helpful or if that's something you want me to continue to do. But the premise here is this. That 92 barrier, 91.85 barrier here was huge, okay? And the break below it, the clear key, and we talked about this in the webinar, there's nothing really on tap until 89.85, 89.50, this key region of fib confluences with the lower median line parallel. So this was on Monday, or the Sunday open rather. There's the break. Boom, you dropped right into it. And in fact, you had some divergence into the lows and a nice trigger break that shifted the focus to the upside. Counter trend, right? So, again, I wasn't actually involved in this specific trade, but this would have been a clear-cut long position. You're looking for 50 pips. Fizzled out pretty quick. And in fact, we made another break to the downside ahead of heading into the UK data. So just remember not only the data prints, guys, as we head into these, what seem to be the major focuses for all these central bank metrics, i.e. whether it's inflation or interest rates, but the break below that, we were looking for a drop into this trend line. Just missed that one. Here's what it looks like on the intraday. Nope, not Sterling CAD, Sterling Oz. Eileen says, good idea for the previous day. We'll see the initiations of the trade better. Yeah, I thought so, Eileen. I mean, let me know if that helps, guys. Again, I don't know how many I'll be able to squeeze by the end of the week. There's going to be like 5 per, if not 6 charts per. I don't think I'll be able to squeeze it, but I'll see how the formatting works. And as a disclaimer, guys, to anyone in the room, we're still messing around with the formatting on the site. There's going to be a lot of things that are still being added, so your input is invaluable to us. Always interested in what your opinions are for ideas, things you want to see on there, things you'd like added. But the Sterling Oz. So this bounce right here, fizzled out pretty quick. Now, again, you would have got the 50 pip ATR, and we have to maintain discipline. The euro yesterday was a perfect example of that. Had we not been chipping off at those 40 pip, 30 pip ATR increments, we would have definitely gotten stopped out on that rally into the highs. And we have to make sure that we're maintaining discipline. By the way, euro just broke the highs. Look for a rally into 110.36, 110.40. Looks like that support bounce was exactly what this thing needed to reset. So if we break through this region, there is nothing on tap until 111.20, just for the record. I wouldn't even try to stand in front of it. I wouldn't try to fade it. If 110.37, 110.40 breaks out here, that's going to be the key resistance that we'd be looking for on the euro dollar. Momentum looks pretty good on this bounce and overnight into 50, I must say. And even on the pullback just now. Look at that. Looks like it never even dipped sub 60. So could be an opportunity as we head into the U.S. session for a fade. I don't know. We'll have to see if we get a trigger up there. But I'm not really willing to take a stance here on the euro as we head into this resistance just yet. Let's see what that 5-minute chart looks like. Okay, this trigger is null. This trigger is null. Objectively, this clears the European opening range as well. Yep, look for 110.35. I think we'll see that in a couple seconds here. All right, sterling Oz. So, Adrius says, yes, that will be helpful. Again, thanks so much. With the charts, Adrius, you got it. You got it. I'll try to keep squeezing those in for you guys. And not only that, to be quite frank with you guys, I put so much work into these charts that it kills me just to take them down after a day and put up the new ones. So I'd rather have them up there for your reference as well. In any event, so for the sterling Oz, I keep going in circles. Sorry guys. For the sterling Oz, we're still looking for a dip into this trendline support. Again, the scale charts on those intraday charts, guys, are really going to be the biggest benefit for you, in my personal opinion, because you can see the broader structure for the trades that we're in. So this move right here, we're looking for a drop into this median line. This is a longer dated, way wider ranged sort of setup here. Zoom this out. Let these lines snap. There we go. All right, and we're just about there. Okay, here's the median line formation that we've been following here on the intraday. Okay, caught the highs, very clean pivots, resistance on the median line, and here we are checking the median line as support. Okay, so that's the target that we were looking for in overnight trade. Again, the opportunity for the long position here, it was there. The trigger gave out, barely scratched that 50 pip mark before it turned over. But remember, counter trend, right? Yesterday's break, sub 92, invalidated the long side, so this was a rally. I'm just trying to reinforce, guys, that we can take these counter trend trades, but you've got to be super nimble. I hope no one got caught on that upside slope here. Tried to make it pretty clear. A bottom line, if this level gives out, look for a drop into slope support, followed by 87.40/53. So here's slope support, 87. 40/53 is going to be huge, okay, and then that's going to complete an actual 1618 extension right off the highs, or excuse me, 2618 extension right off the highs. First up, there's that slope support, okay. Near term, what's the bearish invalidation level? Very simple. It's this region right here, just above the median line we just broke. Okay, that's going to be basically the 189.50, 189.85 level. A break of that region, you'd look for a rally right back into that highlighted region that we talked about last night. Broader focus stays to the downside, sub 89.50. Eileen says, okay, those charts are artwork. Love to see them. Major says, I commend you with all the chart work. Appreciate the comments, guys. Any questions here on sterling Oz? Again, you know, these catalysts, guys, these economic data prints are just perfect resets. I mean, here we are. It's just so it's so funny to see this. Here we are, right back where we started, right? Quick little jackknife effect. Classic U.S. data print. Okay, guys, bear with me one moment. Sorry. Okay. Okay, so that is sterling Aussie. We'll look to see if we can find some basing here. Again, the one thing I want to point out also about sterling Oz, guys, is don't forget those daily charts are updated also every single day. And the daily chart is really what the focus is on. Do you see the slope support? Caught the November low, caught the January low. There's the March low coming right into that same region. The other thing I want to check out today for sure is look how precise in this pair since September every pullback has been 40 support, 40 support, jackknife rip, 40 support. On the pullback, we're sub 40 now, but remember this line means nothing until today's close, absolutely nothing. So if we close today and we rebound or we close back up above 40 and momentum or price finds support above this region, watch out on the short side, okay? If it doesn't, if we close below 40 and in fact we probe into 87.50, that's a big risk for this pair to really see a massive drop off. I'm of the mindset that, you know, you could see further sterling weakness, but at this point, I just want to use some caution because we have some major data coming out of the U.S. heading into Friday. We got the third and final read on the fourth quarter GDP for the United States. And on the back of the fact that we've just seen them reduce their growth prospects, the Fed that is, reduce their inflation target or outlook, and reduce their even, you know, the unemployment picture is supposed to be even lower, meaning that they're expecting to hold possibly a normalization process off for a little bit longer. If GDP comes out much weaker than expected, I don't understand how they're expecting an uptick, but if it comes out weaker than expected, it could be kind of a nail in the coffin here to get us a little bit more of a solid move into the end of the month. That being said, heading into next week, you're getting to non-farm payrolls and the event risk keeps rolling. But just want to bring out this major key support here for sterling Oz. We're at that slope support right now. We just tagged it. Like I said, 87.40, 87.50 is going to be pretty big here on the downside. But on a daily close basis, watch these indicators, okay? Not only are we below 40 here in momentum, but former resistance, 3-point touch, again gave us a trigger on the break, offered some resistance, offered a long trigger, could be some support here as well. All right. In any event, for us to target long scalps, what do we need? Either a pretty compelling long signal down here or a reversal break back above the 190 handle, and that would give us a long signal again. Okay, right now the focus is on this range. Any questions on sterling Aussie? Okay. Last but not least of the sterling crosses is the sterling yen. So here's what we look like as we came into the open of the week. We noted that we were just below slope resistance. Okay. The median line off the highs from February. And basically you're sitting on support at 179. 179 break, 179.12 break looks for a target right here in this little cushion region right into the lower median line parallel. Well, that's exactly what you got. You got that break. It dropped right into that lower median line parallel confluence with those fibs at 78, 78.30. That was basically a 100 pip drop, guys. You're looking for about 40 pips per scalp, so there's plenty of opportunity there. Let me bring up the chart on the right here so you can see it. Okay, and heading into the European session, The game plan was this. Look, watch for a possible drop back into that slope support, but if that slope support gives out, we're not going to be interested in the long side of the trade anymore. Near-term support in that case, you look for a dip back into 78, back into 77.50, where the lower median line parallel again starts to line up with that 786 retracement. Well, you're getting it. It's not the cleanest thing on the break, but here it is. Okay, the lower median line parallel. Let me leave that chart up for you. The lower median line parallel came into play again. We came right into it. This was the bearish invalidation level. And once that broke, again, 78 is the target. That's exactly where we came into. Short little rebound here, testing former support. Still looking lower as long as we stay below essentially the European highs. So the European highs come in right around 78.80. As long as you stay below 78.80, be wary of trying to fade this thing here. Now, in the event that the yen sells off and you see a topside break, the only thing that would put us back on the constructive approach again would be this same region. Okay, so we're going to move that bearish invalidation level down that slope range. This is what the U.S. Open, this is what the U.S. invalidation level for the short side would be. So on trades like these, guys, I'm not going to just try to fade this to the upside. I need to see a break here, and I'd rather play this range than try to call a low on this. Now that we've broken below this formation, this long was superb. Okay, divergence into a trigger break. 9 times out of 10, we're going to take that. This long was superb. Okay. Divergence again on the lows here. And not only that, it was the trigger break to the upside that broke above the opening range for Asia Pac. That was superb against that same median line formation. Now that we're below it, those conviction scalps are gone. So you want to see this hold as resistance, a downside break again below 78. You're looking for a run to 77.50. Invalidation only with a break above that slope range of resistance. So yeah, as we noted in the Sunday report, guys, if you look on the scalp log from last week, by the way, the scalp log, guys, is updated on Sunday night. I know the date on it says 3/20, but that's just going over the trades from 3/20. There's always going to be a post on that Sunday night telling you what our focus is. Long story short, we talked about the fact that sterling crosses are likely to remain in interest, but not till later in the week. This is later in the week. Heading into tomorrow is where I think you get the definitive base on whether the sterling crosses are going to rebound at these levels or whether that support break is legit, specifically if you're looking at like the sterling Oz or that sterling CAD setup, but the sterling Oz specifically is one that I'm very interested in. So the next 24 hours, 48 hours are going to be big for all those sterling crosses that we have highlighted on the intraday page. Questions on sterling yen? Heading into the U.S. session, you want to see that resistance hold exactly where we just peaked, basically that former trendline support, former lower median line parallel. Again, downside target 77.50 on a break below this region. This is the now near-term key zone. It's going to be really thin, but I just want to highlight it for you. That lower median line parallel on that 786. A break below this, and you're looking for that key drop, 76.28, 76.58, this region here. But before we even look down there, just remember, again, on the sterling yen, the daily chart, okay? 78 is key. It's going to remain key. It's the 200-day moving average right now. It's a basic trendline support that dates off the lows from 2011? 2012. November 2012 lows. And lows that you made last year back in October. All right. So, sterling crosses, checking some major radical support. Sterling yen, sterling CAD, breaking support, and sterling Oz, obviously testing or coming in to a major key support. Kiwi dollar, next on tap. One of the major $2 crosses that we've been covering specifically with the euro, obviously. The Kiwi starting to lose some efficacy here. It was sort of my sweetheart play last week. Not so much this week. To be quite frank with you guys, I haven't taken any positions at all in the Kiwi. I've been waiting for something conviction. Been messing around with the dollar yen. I told you, took a break-even stop on that. Euro dollar panned out pretty nice last night. Kiwi, I don't know, guys. It's stuck. It's stuck. We just got a tag of 76.83, which is a level that we were looking at on the scalp charts. That was the top side. Where is it? Right here. That's 2013 low. Okay, so that's the top side target that we were targeting. This is the 22nd from Sunday on the stretch, but a pretty clear play. I tried to highlight these regions, guys, with some extra markers here. Obviously, the major clear focus, we were talking about this for months. I don't want to bore anyone here about this again, but the operative slope keeps us constructive above this green line. Okay, and that green line basically comes in at 75 at this point. Obviously, with time, it's going to be variable. Here's what last night's chart looks like. We stretched through 76.19. We were still looking for that touch of 76.83. You didn't get it in overnight trade. We just got it here on the CPI print. So that is a resistance level that we're looking at, the 2013 low. It's also the September low and could be a more significant area of resistance near term. Long story short, what I do like about this heading into the U.S. session is the fact if we set up a U.S. opening range just above, whether it's this median line or whether it's the 76.20 level, a downside break would be a conviction scalp back into the opening range low for the week. A topside break puts us on target for 77.38, 77.35, which has been a major, major region I've been looking at for a while. Nice confluence of the 1.618 extension off the low and a basic 7.86 retracement off the high. An interesting tidbit, guys. I was talking with my man Christian Kerr, and he does a lot of this type of analysis as well. One thing he points out that is very interesting is that a lot of times the Kiwi crosses tend to really like those 7.86 retracements. Certain pairs will have certain characteristics, guys. For example, the sterling key, Kiwi yen, some of the major exotic Kiwi crosses are known to overshoot, run through resistance, run through support, reversals, a little bit more of the whip-like saw action. A lot of times they'll catch some really sweet 88.6 retracements, which is not a very common Fibonacci level, but nonetheless has caught some radical lows. My point being, I wouldn't be surprised if we do see a topside break here for a rally into 77.40. That being said, the momentum signature has continued to show divergence. Lower low, lower high rather, lower high, lower high, lower high, higher high, higher high, higher high. And again, we're looking only at the closes. We're not looking at the wicks, right? So that's all to say, could be getting a little tired here. Watch the dollar index. It's just another tidbit or another help or another tell, if you will, on the next sort of dollar swing here. Excuse me. And if we do break and close below that formation, remember we talked about yesterday in the webinar, 11,855, 11,880 is going to be the near-term bullish invalidation level. A break below that, a 50 break in momentum, puts this thing on a solid recovery lower in the greenback. So intraday, you're looking for possible dollar basing or that push through 11,880 on a close basis and get that conviction on the longs. Dollar CAD, I just want to point this out. Basic trendline support off of February lows is coming into focus. That coincides with a trendline support that dates back to the lows that you made there in November. And that comes pretty close to basically 124, 123.90, 123.80. Not too far off from where we are right now. So I do just want to point that out real quick. Also note that the low day close comes in just above 24 as well. Low day close comes in at 124.13. So that's coming into a serious area of support. There was caution for us to try to play the long side here, but again, another trade I think is faking out a lot of people. Hasn't been on my radar just on account of where the ATR is comparison to some of the ATRs that we've been working with, guys. But definitely something worth watching here and keep an eye out as we head into the April Open. A quick segue to some of the commodity trades, guys, that we've been looking at. Gold has been on the menu, coming into a nice area of resistance. First target, 1196 into 1198. It's actually 1195.70 into 1196.80. Nonetheless, Nice area of resistance here. I know this doesn't look like much here on the daily chart. I'll show you what this looks like in hourly in just a moment. But guys, another commodity trade that has been super clean. The outside reversal week that we noted on Friday has been, the major tell, especially on the close of where we closed last week through 1167, which was not only the stretch lows there, but also represented a weekly close low. Long story short, this is still the bearish invalidation level, or the bullish invalidation level, excuse me. Near term, I'd be wary of long side exposure past 1196, 1198. I'd be closing out long positions here, possibly get a rebound. Here's what the hourly looks like for gold. Look how clean this is, guys. You can't make this stuff up. You can't make this up. Okay, so you probably, like I said, you probably get that stretch into that key region that we just talked about, 1198, 1196. Looking to wrap up any type of long exposure up here, guys. Okay, this is going to be your near-term bearish invalidation level. So you're certainly at risk for a turnover heading into here. A break through that, and there's room. 1207 is going to be, look for 1200 to be a soft target, but 1207 would be your next sort of ideal look. And 1207, my friends, is, what was 1207? 1207 was the high day reversal close, okay? So this day here, to open up March trade, we had a 3-day stretch to the upside. You had an outside reversal day. The close of that session, 1207, is what comes up as a near-term target here. I didn't have it on the chart. Let me tack that on. There we go. 1206.42. Okay, so again, I'm just going to bring you into a 2-hour chart one more time. Just want to show you that that formation off the low. I think Jamie tweeted something to this effect yesterday too on SB Squawk, guys. So we're in good company here. Look for near-term resistance. Key near-term resistance just below 1200. Everyone's going to be targeting 1200. Wouldn't even put the stretch past 1197, guys. Just it's a nice confluence region which was a clear pivot on the way down. So just watch that here as we head into slope resistance for gold. Any commodity traders in the room? Any other commodity pairs that you want to look at? Feel free to look to throw them out. They've been really interesting. On a side note, here's what gold looks like on the weekly. Okay, there's that outside weekly reversal candle that we talked about on the FOMC release. That reversal candle came off of a key support region, and the last time we saw a major key reversal like that, A, was off of this same support, and B, it was the start of the year. First week, close of December, open of January, outside reversal candle off the lows, charged a nice rally into 1394, 1400. So pretty clear here on gold. Long side gets at risk sub 1198. All right, so that is the gold trade. Here's silver, a quick update on that. Much more magnitude break. Obviously, silver had a very, very similar setup to this one on gold, but really propagated further, right? Really propagated further. We broke through the monthly opening range high on that rally, and certainly now coming into a near-term area of resistance. Here's what silver looks like on the long term. So if you take a basic trend line, just basic trend line resistance off the 11 swing high from September here, and extends it off the 2012 highs that you made back in December, that trend line got tagged almost perfectly here, especially on a close basis, okay, back in January. We came off pretty sharply off that, coming into that region right now again. Add to that is that you have this formation here. Now again, this one has lost efficacy. I get that. It's not the cleanest, but nonetheless, really nice on the median line. Pivot break, pivot break, pivot break. And that coincides the same region, okay, right now for silver. So that's why for gold, you see gold coming into resistance, silver, yeah, looks like it possibly could be resistance here for silver as well. Let's see if we can update or if we have any updated analysis on this. Okay, so a stretch higher would take you basically into 1750. And let's see if we have any compelling confluence Fibonacci regions up there. Bet you it's like a 50 already. It's the exact 50. Wow. Okay, so we're right there. We're right there. Near-term resistance, 17 flat, 1702. You got that trend line resistance off the highs we just talked about from 2011. You got the upper median line parallel. Not the most compelling case, but the 50% confluence adds validity to that. Momentum coming from sub 40, checking 60 as resistance. Okay, so if the broader downtrend for the year is going to hold for silver, you're at your first juncture of resistance right now. Right now. And it's on the back of a 5-day stretch, guys, or a 4-day stretch, excuse me, of rallies. So keep that in mind. Oops. I stand corrected. Sorry, guys, that wasn't the right low. The 50%'s already been overshot. Opened my mouth too quickly. Let me adjust that. Okay, let's zoom this in. Wow, I mean, it's even hard to take any type of extension on this because it's so stretched. Looks like a 618 stretch, but still, it hasn't even materialized yet. I'll leave this on here for now. Possible near-term targets there for silver. I have a question here from Angelo. Great to see you in the room, man. It says UK oil. I asked about it earlier in the weekend. It worked out well for me. Where do you see it heading now? I still like it to the upside for another 100, 150 pips, but not really sure since the last move. Let's take a look. UK oil. Honestly, to be quite frank with you, Angelo, I haven't looked at UK oil in some time. That's not a problem, though, man. We can put something together for you. Let's take a look. UK oil. All right. Let's see what we're working with here. There's an 88.6 catch right there. Love seeing that. We can clean this up. So the oil picture is kind of murky for me here on this one, Angelo, to be quite frank with you. I'm going to tell you my interpretation of what's going on, but you know, this break for me, the drop here, yeah, we found support at 46.60, and I was expecting that to hold again at 60. Now that we've surpassed, or excuse me, at 56 here, you know, break resistance, check it out, or break support, check it as resistance. That's sort of the game plan. We're back above it, or back below it, or we're straddling it, whatever you want to call whatever the hell this is. So it's not a conviction bias for me, meaning if you look at the momentum signature even on the rebound, so typically on a momentum signature that is this bearish, this is like your key sell, right? This is exactly what you want to see to reinitiate the downside. Would have worked out, but on the way down, here's a 40 hold. So on the turns, Angelo, that's sort of what you expect to see in momentum, coming from oversold 60 holds because it doesn't have enough strength to really mount the reversal yet. But on the pullback, this is suspect. This is suspect for me. I do think oil prices probably have further to go. I just wish we had some structure to this. Let's take a little bit closer of a near-term look at this. Let's zoom into the 2-hour. Oops. You know, Angelo, could be a play. I don't have too much emphasis on this because we haven't gotten any rebounds off it except for the support line. So I'll put that as a perspective pitchfork formation here to the highs. It looks like we just broke a basic, or we're testing. We'll be testing a basic trendline resistance here off the highs as well. Remember, this is a 2-hour chart, so the monthly opening range, you stay bearish below 58.70 objectively. You know, that was basically a March 9th break, so you had a 9-day range here that broke to the downside. That puts you on the bearish side. You even came back and checked it as resistance. But on the back of what we're doing in momentum, divergence into the highs, price action making a higher high on a close basis, the oscillator making equal highs, whoops, right, higher high, equal highs. If this trigger break closes, it's a 2-hour chart, so you can't really take these trigger breaks, guys, as a scalp because you need to wait for the 2-hour candle to close. But just as an example, if this were to break to the downside, I still would want to see a break of that trendline support before taking any action, but I think that would put you in a continuation course. You're looking for another upside of 100 and 150 pips. I would prompt you, or I would highlight this region here. Basically, if you beat 57, I think you're all right. If 57 holds in today's price action, I'd be a little cautious for the pullback here because, again, momentum is stalling at 60 on every rally. You have multiple breaks sub 40, sub 30. That's a pretty bearish trend. So, Angelo, just watch that out, okay, man? If this thing fails ahead of 57 again and momentum breaks back sub 50, I probably want to dip out. Probably want to dip out. Just my humble opinion there, but, you know, a trade I haven't really been following very closely. Hope that's helpful, Angelo. Let me know if you have any other specific questions. Jay, we absolutely can. Angelo says, thanks, was not comfortable with it. I see exactly what you mean. Right on. Love to hear that. Great. Jay Jackson, sure can, says, can we look at Aussie dollar? Daily prices above multiple month range, but the 30-minute RSI divergence. Are longs in play? Let's take a look at Aussie dollar. So, good old Oz on the daily looks like this. It's a little ripperooski coming into near-term resistance, 79.38, 618 retracement. This is a long-dated 618 retracement here on the daily charts, guys. I think I've showed you this before, but just in case, it is off of the 2008 lows. Okay, nice 618 there. We've seen some pivots off that region. Near-term resistance for price as we move higher. Momentum. Also at former support, tagged as resistance. That's coming into it now too. Let's see what the scalp looks like. Yeah, I wouldn't have longs in play past this region. That's just me, Jay. I wouldn't have longs in play past this region. 79.38 I have as a highlighted key level. Can't remember what it signifies, but we just ran into it. In any event, the scalp that we've been looking at, I haven't put this on the intraday page, guys, because honestly, I haven't really been operating on it. The levels are pretty decent. I think you get cleaner plays with, to be quite frank, the euro dollar that we've been having, which has a much wider ATR even than the Aussie, which isn't typically necessarily the case, but very similar setup to what we're looking at with Kiwi. Look, it's drifted into a high. Momentum still giving you that divergent signal, right? Who pointed that out? Was that you, Jay? Yeah, the RSI divergence to 30. Yeah, and it's holding 70s resistance. I wouldn't necessarily say longs are in play here now. You know, the longs have been in play since the break that we saw here. Initial opening range gave us a break. Momentum was above, or it gave us a trigger break here. I've since removed it, but was a clear play into 79, 79.11, which is basically the highs that you made for February. And also this slope range here, which is kind of sloppy, but it had caught the initial two highs. Long story short, you're still getting divergence into the highs. I think longs are at risk below 79. The conviction for the short side doesn't come until it breaks up 78.45, unfortunately. If you get some compelling short triggers and a break of the opening ranges, you could try to press the shorts here. Again, half leverage. Again, I mean, the main thing they have to keep in mind, guys, is we don't want to lose focus of what the dollar is doing. So the dollar, if we find support here, sure, a rebound off these levels, great. That makes sense, perfect for a little Aussie pullback, right? But I want to say don't get aggressive. Remember the strategy that we're working with. You got to stay real humble. You got to stay real nimble. So if we're going to get involved with the Aussie, every 28 pips, every 25 pips, pull something out, bring your stops to break even, okay? Another thing I do want to note real quick, guys, is I've gotten some emails, and I've been trying to give you guys as much tidbits as we can as far as the strategy is concerned. You know, it's always going to be better for us to sell into resistance and buy into support, even when we're scalping. I find a lot of questions of people trying to take the breakout scalp, and that's not always going to be in your best interest, guys, because inherently your stop is going to be skewed because you're already on the bottom or the top end of the range. So it's always better to sell into resistance. It's always going to be better to buy into support. If you miss the initial break, whether it's the opening range, whether it's the trigger break, you can't take it. Okay, if we miss the initial trigger, you start jumping into these guys and it's chasing these. It's going to make a mess. You got to wait. If the market retraces and gets you an entry back into that level, great. If it doesn't, there's going to be tons of opportunities coming up. So I just wanted to give you a quick caution on that. And by the way, I appreciate all the emails and the positive reinforcement from you guys. It's been great. So I hope that offers some clarity on that. Jay, let me know if you have any questions, man. I'm looking lower below 79, man, just because of the momentum getting tired here. Every stretch took you lower above 70. What did I say? A little bit less above 70, I guess. He said, I don't know how to say it, but basically this 70 break was much bigger. This 70 break was much less, much less. Now you're holding 70. So momentum getting tired, price at a high. You know, you could get another stretch into a high right into the U.S. Open, but I'd be cautious below 79.38. That's 618 that we just missed on the stretch here. The high so far, 36, 2 pips off. By the way, this is going to be our new term bearish invalidation level, and a break above this, you're basically looking at 180.20, 180.13, and that's going to be a bigger area of resistance as it represents not only the swing high that you made there on the January stretch, but it's also a basic 618 of the entire 2015 range. And the longer dated 100% extension, this is off the highs. So big area if we do break this resistance at 79.38. But initially, near term, heading into the U.S. session, you know, that's the resistance I'd be watching. Jay says, caution acknowledged. My man. All right. Philippe, great to see you in the room, says, hey, Michael, I hope you're well. Thanks for asking, Philippe. I have a quick question about yesterday's webinar and the dollar yen. Sure. Here's dollar yen on the daily. Woo. Looks like we're flirting with a break of that range we talked about. Your question says, the pair was stuck and we were waiting for a break lower or higher. Today it drifted lower, but was there anything you call a good trigger? Because it didn't look like a real break with good conviction. I don't disagree with you 100%. So for me, I already told you. I mean, I got nothing to hide. It's right here. I'll show you the dollar yen trade I took yesterday. I was with you. We were at the bottom end of the range. I got a long trigger. This was like in U.S. trade yesterday, right into the afternoon. You got a long trigger that gave out. I missed that one, like I just told you, so I'm not going to sit there and chase. On the pullback, though, came right back into that resistance trigger and held, and that's a stop I'll take all day long, okay, all day long. So we pressed the long. I was trying, I was really busy yesterday, so I just put the limit at 120 with a stop against the lows. We just missed getting stopped out into the close here into the open of Asia. The rebound again offered a nice opportunity to lock in those 20 pips. I didn't take it, and just trying to head into the late night session yesterday. I kind of just threw on a break-even stop, and that triggered. So long story short, no, I don't necessarily say there was any compelling long triggers. The only thing I was looking at earlier this morning was this, and something like this might have faked me out. But if it did, it would have panned out pretty nice too. That's a 4-point trigger touch, or a 3-point trigger touch, whatever you want to call it. Okay, that would have been a decent trigger. That happened at 8:30. Obviously, that's the data print that we got right now. You're not going to get a play off that. Other than that, there's really not much here that was a decent trigger. In fact, the support structure in 1927 is still pretty big because it's that stretch low we made on FOMC. More important than that. Let me zoom this out real quick. There we go. Just want to snap all those lines. Is the pivot that we've seen right along this region. You see where my cursor is? So caught that high on that swing for January. Just missed that high in February. Pivot, pivot, pivot. FOMC low. We just tested it. On that low, you're still signaling divergence. So, dollar yen, for those of you who've been, following me on Daily FX for a while, I don't really like getting involved in dollar yen. I'm not a dollar yen trader. We've been focused on dollar yen on the intraday page on the scalps just because the setup's been so clean. But I hear you. On a break like that, I wouldn't say that there was any conviction scalps here at all. I mean, even the trade we took last night, I wouldn't say that was a conviction. I wouldn't say that was a conviction scalp. It was just a trigger, and it was a very good risk to reward. And sometimes you got to throw those out there. But yeah, I mean, even the momentum signature on the 5-minute here is pretty benign. Pretty benign. So heading into the U.S. session, look, heading into the U.S. session, Philippe, just to put things in the open, man, listen, if we break through 119.65, we got to stay objective, man. Again, you look higher. As much as I might not participate in that, but that's what happens to the bias. If we break above this, it does shift the bias to the upside. This was the opening range low for U.S. yesterday. This was the opening range low for Asia yesterday. This was the opening range high for Europe today. It's a clear-cut pivot at 1119.65, 1119.70, or excuse me, 119.65, 119.70. If we break through this, you look for the recovery into the highs again. And in such a scenario, if we do get that kind of play, you tack on a quick retracement here, guys, and see if there's any confluence, but essentially you're looking for 120 again. Does that make sense, guys, for everyone in the room? I hope I'm not losing anyone. Philippe, I hope we're on the same page here, but I hear you. I hope that answers your questions on dollar yen from yesterday's scalp. If this is the real deal break, watch the close below 119.70, and again, if you do get it, sayonara. Look for that washout maybe on a Friday GDP print. Philippe said, yeah, I thought so, needed to confirm. Awesome. So we're good. Angelo, I got you. Jay, I got you. Philippe was saying, I was thinking about getting short below this orange support zone on your charts. Yeah, I mean, that would be the play if we're going to see the continuation. But, again, we held the FOMC low. The data today wasn't all that dollar positive, but it wasn't all that dollar negative either. It was a little bit weaker than expected. We came in line on the month on year on month, year on year a little softer. Long story short, if you see a short trigger into this region, even on the short, you don't want to play it past 119.20, okay? This is going to be the conviction break now. Why? Because, Philippe, it's the opening range low for U.S. Does that jive well? Does that make sense? Eileen, great to see you in the room. I'll see you tomorrow. Michael, do you usually enter with two positions, one for the first target and one for the second? Petra, are you talking about lots here? Guys, I don't scalp with one lot at a time. I have to use multiple lots because that's the only way I can chip off a section of the trade as we get into it. I don't want to press into one in pressing leverage. That's not a good idea if you're not comfortable with it. But whatever you're trading with, guys, break it down. If you can't trade multiple standard lots, then trade multiple mini lots. If you can't trade multiple mini lots, then trade multiple micro lots. The point being, we want to be able to have the flexibility to close a portion of the trade and bring the stops to break even. It's a big part of my personal strategy because once the scalp is initiated, and once we attain that initial scalp target, I'm not willing to take a loss on that, period. Period. If I'm taking a scalp and I'm looking for 22 pips, the second those 22 pips are in my pocket, those stops are going to come to break even. Now, the stop never comes to break even, ever, unless I've taken something off the trade. They go hand in hand. I'm never going to take something off the trade and leave the stop in the loss, and I'm never going to just bring my stop in and not take something off the trade, because if the market retraces, now you're awash. Well, why? You made a proper call. You made the first ATR target. Take it. All right? So both of those go hand in hand. Petro, does that answer your question? She says, yeah. He says, yes, got it. All right. Thanks, buddy. Make sure we're clear on that. So, yeah, typically I'm heavier on the initial scalp. Absolutely. Absolutely. And then, we take off a quarter of that, a half of that. You can work with that dynamic based on your own risk tolerance. But, yeah, I mean, part of the strategy is you need to have multiple positions on just so you can have that flexibility. If you're just getting started or you're brand new to the strategy and you're just testing the waters, that's fine, all in, all out in every trade. But you just want to make sure you're being a little bit more meticulous as far as setting those stops. All right, good question. Good question. I thought that was implied, but good question there. Half. Okay, sure. It's all good for now. Philippe, got you. And Petro's good. All right. So, guys, we're over on time. I covered the scalps that were on the intraday page. If there are any other questions real quick before I leave, do feel free to throw them out. A quick update on what the British pound is doing real quick on the scalp side of things, guys. This was featured on the intraday page all last week. I just want to highlight how clean the weekly opening range is for British pound versus U.S. dollar. Really clean, okay? You're basically looking at 150, 149.90. Let's be exact, is the opening range high for the week. Opening range low for the week is a basic 236, 148.50. That's coming up on slope support. The focus is going to be on a break of this range heading into the end of the week. Most of the UK event risk is out of the way. Now you're looking for the major headline hitter, which is going to be the fourth quarter GDP update on Friday from the United States. So watch that range. Downside break sub 48.50 puts the shorts back in play. Topside break above 150.14. And there is, a nice little rally here maybe in store for the dollar, or for the British pound rather, versus the dollar. See a question here from Pooja on Euro Oz. Here's a quick update on that trade. I know a trade that Jamie's looking at as well. Look, I've been watching this median line that we've been straddling. I really don't have a play per se on this one, guys, just because the Euro and the Aussie have both been finding some support here. So the cross being a little messy shouldn't be too surprising, Pooja. A quick look at the Euro Oz on the intraday looks like this on the 30-minute. Again, a very compelling weekly opening range trade. I really don't have much on it beyond that. I was looking at this pitchfork earlier in the week. I think we checked this out yesterday in the webinar, if I'm not mistaken. And again, it's not a conviction pitchfork. That's why it's in dashed here. But if that is the break, or if we do need to adjust this, I don't think we just have enough price action yet, Pooja, to be honest with you. I just don't have it clean here enough for me to have a conviction bias on it. I'd be waiting for a break of the weekly opening range. And again, if we zoom out, let those trend lines snap. The median line that we're looking at, the daily chart, is kind of what I'm looking at still, even on the intraday. All right, 140 key resistance. That's the break that you would need to really get the conviction. The opening range comes in at 139.50, so you got a 50 pip run there. If we break the weekly open high, 138 still key support. And break below that, you're looking for a dip into the lows again. Other than that, I would say watch the price action, euro dollar and Aussie dollar respectively, they've been kind of in lockstep, which is why, again, it's not surprising to see this, but with the opening range for the week setting up for a perfect Wednesday, Thursday sort of play into the end of the week. So Pooja, I think we do have a play here, just not yet. Just not yet. All right, says okay, thanks. All right, guys, have a great session. U.S. markets are open, about 6 minutes in. We will keep you updated on SB Squawk. A quick reminder, Jamie will be traveling this week, guys, so there's likely to be a little bit of a lull in as far as the updates from the Squawk, SB Squawk. I will keep you updated on the Intraday page as usual. We will announce his webinar this week once we lock that in. Again, with the travel plans, it's going to be a little tricky, but we'll definitely get the midweek webinar in this week. We'll keep you updated on the announcements page on the members homepage. Best of luck trading. See you guys nice and bright and early tomorrow morning. Cheers.